Quant's done that more often, right? When they had like this, finally everybody back to work. We are now in a park in London type of thing. I think it humanizes them. I'm a sucker for that. Sue me. Um, on the other hand, right? So we're looking at crypto. Last week prices went up. Everybody was bullish, and
Everyone happy.
everyone was happy. No, everybody was happy because we didn't break 1,000 yet. But um, we spoke in the Dutch episode about when, where, why, how would we diversify? And before we get into that, my take on diversification is that diversification is a risk management tool. So that means that, I mean, it can mean two things, right? I'm an investor. We spoke about this in a different episode. I regard myself as an investor. Let's keep it a little bit more honest.
You're a bit safe. Yeah.
Yeah. So what I prefer to do is I prefer to learn about a specific company or a couple of companies and get into the nooks and crannies, dollar cost average into my investment, and hold stock, tokens, securities, assets, whatever, for a prolonged time with the intention of price appreciation, but also maybe dividends, staking rewards, for lack of a better word, stuff like that. So my portfolio is small, right? I have like maybe, if I look at significant value, I think I have 5 assets, something like that, maybe 6. That is not diversified. It is kind of diversified. I have some securities. The overwhelming majority is QNT, and I have some shit coins that I had as rewards for specific things that I did, and I have some NFTs. Most of them also rewards. If Quant, which is like 90+% of my portfolio, reaches a certain number, I will be de-risking. I will be diversifying. And the point of that is how good Quant is, right? How reliable, how professional, etc. in my mind. It is also, quote unquote, vulnerable, portfolio-wise. If Quant, for some crazy reason, quote unquote, fails, I would lose everything. So de-risking, diversifying for me would mean that let's just use some fictional numbers. Let's say my portfolio is worth 5 mil. I would then take 1 mil, 2 mil, and put that in the traditional stock market. I'd probably not be buying straight up ETFs. I'd probably be getting a couple of assets from different sectors over different continents, right? So you have a geographic diversification as well as a sector diversification. So don't only buy tobacco from the US, but also buy tobacco from Africa, Asia. Just giving an example here. So in case the US markets crash, people still need to smoke. They will go to Africa for tobacco or to Asia, and I will still see part of my investment not die, right? That's the point. Prevent utter death, right? So if you lose a hand, you're
Don't
still
get
alive.
beaten by FUD.
Yeah, exactly. Right. So to me, that's the point of diversification. Now I hear people saying, right, so I know Quant is a sure thing. I invested in it, DC8. Been doing it for 3 years, but it's getting boring. So I'm diversifying now. And I am getting what was green last week, this, that. So I spread my portfolio out a bit. To me, that is insane. Because you know the value of your primary investment, you research that through and through. You know it's going places. but it's just not going quick enough. So what you do, you skim off the top, whether you're in profit or not. I'll leave that in the middle. And you then decide to buy 4, 5, a total 25% of your portfolio. Gems, quote unquote gems, like sub 20 million market cap crypto gambles. With the reasoning, if they run before QNT, I can buy more QNT. And yes, I can grasp that reasoning, but not from a diversification standpoint as an investor, because the person chose to go to quant and research, right? Invest, hold for the long term. He knows it will pay dividends. But then skimming off your initial investment that you researched to then buy super high risk shitcoins, that just doesn't compute to me. And why? And it's the same for diversification. Let's say quant goes right to the, and I have my 5 mil. I will not put any of those mils into crypto. Why not? Well, if Bitcoin dies or ETH dies or FTX dies, or there's just this sliver of expectation that either of those three dies, markets crash, everything goes down. Right? And diversification for profit, some sectors go up, right? We know quant lagged sometimes.
You're not diversifying. If you diversify into other crypto, you're just a degenerate gambler.
Exactly. So when everything goes down, everything goes down. But when things go up, not everything goes up, right?
Exactly. Look at it like last year. We had the FTX crash with the curly criminal. And
was it that 2 years ago already?
No, that was last year. And
right.
Well, that criminal, he crashed the market. And Quant had nothing to do with it, right? We had nothing to do with it. We were not into that shady business of him. And still, we dropped back to like, what was it, $40?
Yeah.
And the entire crypto circus got involved, right? Because it's one big mass of 10,000 or a bit more coins, of which 99, of which 99.9% of them, they don't have any intrinsic value. There's nothing to them. And when that circus crashes, we just follow. I mean, we're still coupled to it, right? So you're just a degenerate gambler if you go into. You're not degenerate, that's not true, but you're gambling, right? You are gambling and hoping that something goes up. That's all you do.
In favor of that strategy, right? If you decide, okay, I have my quant bag, I researched that, I invested in quant, right? Let's say we take the investor thesis, but I also want a little bit of thrill. Grab new fiat or other profits, and then make multiple bets, right? Go with the day trader kind of thing, do some research, and then choose like 10. And make sure that you put your money in a way that you mathematically shouldn't lose. Right? I mean, that can be a strategy to get like 100x quickly, but you need to be locked onto your screen, and you need to do more than just use some Telegram app thing and maybe some
hope for the best
groups. Yeah, right. I mean, just like investing, shitcoin gambling is also an art, right? Like I said, I find a tweet about how they treat their personnel and how they look at the whole picture. I find that fascinating, interesting, and it could even be deterministic whether I invest in a company or not. I mean, if a company uses slave labor, I want to know. I won't be fucking investing in that. no matter what the ROI is. But that's just me.
Yeah, no, true.
But a mentality like that is also required for shitcoin peddling, because you have to do the work. You have to at least skim through a white paper, and you need to do that for like 10 projects. Yes, you don't have to go into the nooks and crannies, because to me, when I invest in something, I prefer going with something which is a set and forget, right? You buy it, you DCA into it, and if I done my work well,
but I mean, like,
then I have a business that is kind of secure, an asset that is kind of secure for the next couple of years, and with minor updates, I can stay in the loop.
I mean, you don't necessarily have to read. It really depends what your strategy is, right? I mean, you don't necessarily have to read into white papers if the only thing you're going to do is follow the hype and try to sell momentum.
That is kind of true,
because all those
if you don't
crypto,
know if you don't know what a token is for and why the token is created and whom are behind it, then you cannot exclude the rug pull, right? Think of Truebit. Think of Truebit. They had a paper, we read it, and we read the original paper. We just didn't know that there was another motherfucker that was pumping up the price, and it wasn't Truebit themselves. But regardless, you need to know something.
Yeah, no, absolutely.
I mean, just going off
you need
the chart.
To have this bare minimum of information should be available to you. I agree.
Yeah, and word of mouth is not enough, right? Yo, I had this call that you should be buying this. Oh, there's this group, they're buying that. Okay, that's fine, but you need to keep your ear to the goddamn road, or you're gonna lose.
Oh, absolutely.
And to me, and this is to take it back. If everything around you appears to be turning green, why then sell the golden goose to go and find some golden ducks in the hope you're gonna get some golden eggs, duck eggs, which are way less valuable, you all know this, in the hope to then flip those and then get back with a profit into your golden goose business. I mean, it's not financial advice, right? Just sharing my thoughts on how I perceive things, and I hope it just lights your light or something like that. Well, that was very good English. And it grants you some perspective, right? To what many of us and you will be doing. Cycles will always be there, and crypto will remain crypto for now until regulation sets in. Most of the coins that you see go like 1,500, 2,000, 3,000x in a couple of days. Those are the ones that will be banned 4 or 5 months from now. When Micah sets in, oh no, that's postponed to June, right? Or was that the UK thing? I think they're synchronizing their cycles. Yeah, Micah and the regulatory framework for the UK.
I'm not sure if it's synchronized on purpose, but it is. There's definitely a pattern. Yeah, absolutely. But don't ask me for any dates here.
No.
Well, I have no recollection of when everything is. Sorry.
Yeah, Micah will be coming, and the repercussions will be serious. And the US is also working on the regulation and such. So a lot of the shitcoin gambling will most likely be gone by the time the halvening takes place. And we know we all love a good old halvening. Hey, shall we take a look at the markets right now?
Yeah, sure, of course.
All right, let's